Can you see my screen? Now, this is TradingView platform where you can professionally conduct your analysis and then take your trade and manage your trade. You know, there's what we call market analysis. You might want to write it down. Market analysis. Then we have trade execution. And we have trade management. These are the three things you do on this TradingView: market analysis, trade execution, and trade management. So what we are doing is analysis. And don't forget, analysis is not only technical. We have technical analysis, we have sentimental analysis, and we have fundamental analysis. But we are dealing with technical right now. So this is the chart of gold. I'm changing my time frame from here. It's on daily, but I'm changing it to 1 hour now. On this 1 hour, you can see this market. It was going up from, let's see, at the left-hand side, you see the historical price action. That at this level, you see what is happening here? At this level, price got in here and it rejected down. So what is this thing telling you? That this place is a supply zone. Supply zone is a zone where sellers are having a momentum. There are sellers at that zone. You know, trading is about psychology. Participants of this market, they know that, okay, previously this price got into this place and it sold massively. How many pips? Let me see. I'm clicking on this and I'm clicking on this measurement to measure pips here. How many pips from this place down? We are rounding up in the next few. This 213 pips movement. Okay. Now, participant of this market will say, okay, price got into this level, supply level before, and sold all the way. So as price is approaching that level again, there will be possibility a sell-off. And you see, price got to this level now, and then it's sold. Because when we talk about demand and supply zone, it is not just a single line. This is not single. It's not a single line. It's a zone. What do I mean? From this place to this place, it's a supply zone, not only just a single line. Don't make that mistake of thinking a single line is a supply or demand zone. So you measure from here, Fibonacci. We're not going there today, but that's where I'm going to stop. This is Fibonacci tool. I'm going to measure this movement. So I click here, click on the Fibonacci retracement. Then I point it last high and drag it down to this last low. You see the levels. These are the Fibonacci levels. 0.38 to 0.5, that is 50% retracement, 0.618, and then 0.786. There is the one of 0.23. I don't normally put that because I don't use that in my trade. And so this pullback that is going on now, the market dropped massively from here. And you can see this going up now is a pullback. So if you pull back to this place, there's a possibility of dropping again. And if it's dropping, it might stop at this last low, or it will break the low. And after that movement, there's a possibility of retracing back, then go up again to this 50% retracement. And then it drop from there again, either to this level or it breaks it lower. Here, we are going to stop here for today, but what we have just discussed is the structure of the market. And I've shown example of an uptrend market. Let me turn to the line chart for better view. Line. Now, you can see a typical example of an uptrend. See it here. This is the section of the move. Please, can you mute your mic, please? The market moved from here down to this place and it retraced. You can see the retracement here. And then it moved again. It broke the previous high and went higher. So that is exactly what we have discussed in this meeting. So for today, we will stop at here and give room for questions. But before then, we would like Engineer Mike to summarize what we have just said. Then we'll give room for questions.
All righty. Thank you so much, Pastor, for giving us this brief. So today what we have done is we went back and reviewed what we learned yesterday. So yesterday, what did we learn? We learned that there are three different structures of the market. One is the trending, and inside the trending, we have an uptrend and a downtrend. So that is one. The second one is we have one which is consolidating. So it's going like sideways. And in that particular trend or in that particular structure, you can buy or sell depending on whether it's at the resistance, wherever you will sell, or whether it's at the support, where you will buy. Those are the two markets that you can trade in. Then the other one is which is gyrating. Basically, it is you don't know if it's going up or down, and that's a market where you will not be able to trade in it. Okay. And then now we came to the last one here, where he was mentioning, like this one that he's showing up here, is when the market is going up. And how will you tell that it goes up in the first impulse? When it goes in the first impulse, you don't have to actually enter in. And you brought the example of Joel, where Joel's way of asking us to enter the market in most cases is when the impulse happens, then at the end of the impulse, you say that is the point of entry. But as you can see, the market will retrace a little bit down and then go back up again. So now, with this knowledge that we are getting from Pastor, what we can do is we can wait. When the impulse goes up and meets a resistance there, then it will retrace again down. That's where now we can take our entry point. Why? Because we can gain some pips there already. Otherwise, if you took where he gave to us, we already have lost from our equity. So that's one. The second is now, if it's an uptrend market, how would you determine where to take your second pip? I mean, a second profit or the third profit. So we can use the Fibonacci retracement tool. And he showed this Fibonacci retracement tool where you go into the tools using this trader view, and he's going to show us how to install or how to download the trader's view. And once you know how to use the Fibonacci tool, Then you can go to the top of the market, the last point where the market has gone to, and you trace it all the way down to the end of the market. And then the Fibonacci will give you the lines or the positions whereby each not stop loss, each take profit you can take over. So that's what we have done today. That's at least from my understanding. Thank you so much.
Thank you very much, sir. That is exactly what we have done today. So we give room for questions and we proceed from here. So, Mr. Titus, we take questions and then from there we round up in the next 5 to 10 minutes.
Okay, thank you, Professor Mike. Thank you, Pastor Emmanuel. So I think they've done justice to it all, the market structure, the way the market moves. This one, you don't need anybody you should stick to your head. You should understand this concept. But there's room. In case you couldn't capture anything, feel free, ask questions. Like, I just want to reiterate what Professor said. There's no stupid question. Feel free. This is the only place where you can ask any question of your choice. This is a place where you can learn very well. So please, let's start with the first person. I'm going to call it in an order so that we don't waste a lot of time because we're almost done for today. So the first person on the queue is Mrs. Lizzie. Yes, I think she's the one that even raised her hands. So Mrs. Lizzie, you can, Pastor Lizzie, you can unmute and then ask your questions. Thank you. And after that, Alex Omolola, please prepare yourself for your questions. Thank you.
For that presentation. Just to have a little understanding, what is supply zone? Because I was trying to write it down, I didn't get that. Supply zone.
Okay, supply zone is the same thing as resistance. Supply zone is resistance zone, and demand zone is support zone. It's just those names are used interchangeably. That is the place that market will sell from. That is a supply zone. And the place market will buy from is the demand zone, also called support. Supply zone, also called resistance.
Thank you, sir.
You are welcome.
Okay, the next person is Alex Omolola. Okay, no, Jeremiah Matt. So Jeremiah Matt, please make it very short so that we can have time for other persons. You can go ahead with your question. Thank you.
Okay, thank you, sir. Thank you, everyone in the house. I just thought of something. I said, is the market trend, is it predictable? On what point is market trend predictable? Because I have been on this trading, I have lost. I think it's not predictable. When you give a time to see the market coming at your favor, it's not always so. It's not always so. It does not come at your favor. It just reverse. On what point is it possible to predict markets? If it is possible, on what point is it possible to predict it, that this market is going up now, or it will certainly go down for like 1 hour?
Okay, thank you for your question. In this financial market, both for forex, crypto, and indices, it's a game of probabilities. And that is why you have two scenarios. What do I mean? There's nobody that say, okay, we are not even here to predict the market. We are here to trade what we see. That is what we call price action. You follow exactly what the market is presenting to you. So the people that have so many wounds in this market are those, excuse me, that are busy predicting the market. Let me show you an example. What we do in this market is what we call, you have two possibilities. Okay, this is my chart on gold. I have already drawn, this is a 1 hour level. This level 18 is a support level. This level 29 is a resistance level. And this is a daily support level. This is a daily resistance or supply level from my analysis. And this is a 1 hour support level where our masters are in this level. Because of my chart, this level, this particular candle you see here, we were there. This candle you see here, pharmacist told Alex that quit your buy trade because there was a signal on buy. Why? We already have the understanding that, okay, this market here, it has broken this daily supply level. You know, because at this level, there are two possibilities here. If you are doing analysis, you have marked your zone. This is a supply level. Okay, two things can happen here. If price breaks this level with momentum to the upside, then it will continue from here by retesting this level, then boom, and the next level will be here. I've already done my homework. But the second possibility is this price can come to this level, supply level previously, and then breaks through. This breakthrough, there is what I told you yesterday, a breakout or a fake out. This particular one that happens here is a fake out. Normally, if you give this buy signal given by Joel today, I won't take it. Why? There is no momentum in this market to sustain this breakout here. No momentum to sustain the breakout. Why? Big boys are on holiday. Liquidity is lacking in the market. So the volume is not there. And for every breakout to be valid, there has to be volume in the market. Most times, before I can take a breakout trade, what do we mean by breakout trade? At the supply level here, you are supposed to sell, but you are not selling blindly. Market has to give you signal for sell. What is the signal? We'll get into that. So your question is, can you predict the market? Me, now as a person, haven't done my homework that this is a supply zone. This is a resistance. I've marked it. You can see my chart. If you see it, you can see it's marked. In the next 1 month, I'll come my chart. If you give anything, I know where price is heading to. As a matter of fact, I'm selling gold now. I'm not asking you to sell, but I'm selling now. Just give me 1 second. I'll be responding. So at that level, there are two possibilities. Either it breaks and sustain, then you buy, or you wait for it to break it down, then you sell. So, because it's a supply level. So how you predict the market is by doing this, your analysis. At the level where the price is now, you will now say, okay, if market breaks that level, I'm going to sell. Or if it breaks that level to the upside and sustain, I am going. So there's nothing that maybe the market it does not have direction. It's not so. And the reason I sold is because this is a support before. It has broken. Price broke this support. It went and retested it. And I'm selling. My stop loss now will be here. I'm putting stop loss here. My stop loss will be here. And why am I putting it here? The previous candle, see all those, how many candles? 1, 2, 3 candle. They could not pass through this level. So I'm putting my stop loss here based on that fact. And if I want to measure how many pips am I losing, so I go here. In case it goes against me, I measure from this, my entry, I'm losing 30 pips in case it goes against me. So you can see that my pips is minimized. And I'll give you result of this trade. I'm putting my stop loss at 2620.5. 2630.5. So that is the answer to your question. At when price is at a particular level, supply level, you wait for reaction at that level. Now, I'll give you an illustration. You see, there's what we call checking point. Don't forget this, all your trading journey. My stop loss will be 20.5. Okay, let me leave it at this. At the checking point, you discover that a big vehicle trailer is coming. And then this trailer at the checkpoint, and then it's coming with heavy, high speed. The checkpoint, the vehicle, but you see trailer coming with heavy speed. This, in this scenario, this is the checkpoint, and price is coming. This checkpoint is supposed to be support. That is to halt price, and price is coming from this checkpoint with high speed. Sorry. So every road safety man should be able to know that with this momentum, this speed coming here, you have to run for your dear life. Your hand you raise there will not solve matter. In the same way, you see big candle coming from, and it is at the support level from here, and it's not slowing down. And you want to say you want to buy. You don't buy because you wait for that candle to finish its job. So what do we mean by that? So at every level, this is a support level, and price now, what the price does here determine your action on taking trade. If it breaks, if it sustain it, as in if it provides support here, then you can buy, and your next target will be this place, like I've already done on my chart. So price market is predictable in a sense that from your analysis, you know your support area, which is your demand. In this case, this is mine here. You know your supply area, which is your resistance. This is here. So I predict that, okay, if market comes to this place, this supply level, and it could not stop it. It's coming there with high speed. I will wait. I will not take that trade. But if it comes here, it breaks the way it did here, and then it loses momentum. It closed below here, then it's a sell. Do you get how market is predictable? But in your analysis, always have two possibilities. It's a game of probability. So you have two possibilities, two scenarios. Here, you say, okay, this is support level. I will wait to see market reaction at this support. If it sustain, I will buy. If it break with volume and retest it, I will sell. And if you sell in this scenario, your next target will be this. Ultimately, this is my weekly level. You can see that everything is drawn. Weekly is here. So that is how it is. Have I answered your question?
Thank you very much. I appreciate. I see a question.
You can't ask again. Another person. I'm having a meeting by 6. So in the next less than 5 minutes, I should be out of this.
Mr. Mark, in next class, you can ask that question. You get, so the other persons can also express themselves. We have limited time here. So, Mr. Alex, do you have any question? Ambassador Ada, do you have questions? So let's just proceed quickly with your question so that we can round up as quickly as possible.
Thank you very much for this opportunity. Can you hear me?
Hello, sir.
Loud and clear. Loud and
All right. Thank you very much. From Pastor Emmanuel's trading view, I can see that here you already have all the support level, resistance level drawn. How can he assist us to be able to do that for our own trading view too, so that we'll be able to know when trading, when it gets to the support level, the resistance level, and all that?
Okay, that is exactly the journey we have just taken a step into that journey. From here, everything I know, I'm going to share with us, and you'll be able to replicate the same, and then you share the same knowledge with others. That is our goal in this community. So just follow and be patient with us, and we'll get there ultimately. Thank you.
Thank you, sir.
Thank you. Bosco's fan.
Okay, Ambassador Adad, Mr. Chooks, and Conquer, the Crypto King of Africa, Engineer Ben, Jesus Care, Pastor Lizzie has already asked the questions, Papa John, Simeon, Mr. Simeon. Please, if you ask questions, please let's quickly ask. You can unmute and ask the question as quickly as possible so we can resolve it and move to the next thing for the day. We have so many things we need to do this evening. Thank you.
Yes, good evening, everybody. Mine is to thank all of us for making ourselves available to learn. The best way to succeed is to learn, relearn, unlearn, and relearn. Have an open mind. Learn to be able to accept things that you do not know. Learn it, know it, and as such, make the application, whether for change or for a progressive venture. At the end of the day, we'll become better for ourselves and for our community. So let me appreciate the facilitator most especially for giving us his knowledge free of charge. Like I said, I was talking with somebody who told me that to get this kind of knowledge from him, it will take $500. If you calculate that to Naira, that's almost $1 million Naira. And yet somebody is giving it to us free. God who sees your heart will reward you abundantly in Jesus' name. And for the rest of us, let's not take this thing for granted because we are not paying money. Because if you do, and you miss it, by the time you want to learn it, when you hear the bill, you will understand that it is better to learn it like this. So I once again I appreciate every one of us because we have limited time now. We have to join that class. So thank every one of us. And tomorrow we'll continue from here. God bless us all.
Thank you so much, Engineer Ben. Thank you, Pastor Manuel. God bless you all. Come on.
Okay, Prof. Over to you, sir. Professor. Prof. Can you round us?
Okay, I see Jeremiah. Did you have a question or what is this? You raise your hand again.
Yeah, it's very important. Sorry to say. Just short question. Is it okay to stick to be a bullish? Just stick to be a bullish or to be a bearish? Is it okay? I've been studying about trading. Can I just stick that, watching carefully the kind of commodity I'm working on, and stick to bullish as a bullish or as a bearish? Is it okay? Or I need to change if I must make profit?
Okay, it's I've come across some profitable traders that I think some stick to only sales. So or somebody he does well in a sell in a bearish market. I know a man that does only buys. Even if you see gold going down 1,000 pips, it doesn't sell. He waits for a buy. So you can become a professional gold buyer. That means you are bullish on gold. But the only disadvantage is, this market does not go in one direction. It's either it goes up or it comes down. You will lose. I mean, you will miss a lot of opportunities. But it's your decision, and you can become an expert in that area. But if I would advise you, it is better to be both a buyer and a seller. The only thing you will do is if the market is trending up, be a buyer. If it's trending down, be a seller. That's what I can say for now. But the decision lies within your ability. Thank you.
So that means I really need to work on a lot of things. Thank you very much.
All righty. Thank you, Jeremiah. I hope your question has been answered. just to add to what Pastor has mentioned, I know that Mr. Joel is a professional buyer. He is just buying. But to do that, you really, in my mind at least, you need to have a big budget or a big capital, because there are so many times that we followed Joel when it was a sell and we lost a lot of money. But because he's having very big stop losses, he will wait until it will come back up. The overall trend, if you look at maybe a year or so right now, gold is obviously bullish.
When I have money, you let me.
But we are still small traders. So like Pastor has mentioned, it's up to you what you want to choose. You want to be a professional buyer or a seller, you can do that. But thank you so much for that question. All right. I think now, unless there's no another question, I'm going to close. Let me see for maybe 2 seconds, see if anybody has got a raised hand. Nobody has raised hand yet. So thank you so much, Mr. Titus, for organizing this, and also Engineer Ben. And thank you so much, Pastor, for giving us this knowledge. As Ben has mentioned, this knowledge is very valuable. We should not take it for granted. And hopefully everybody will take this seriously. So what I'm going to do is, as I record this thing, I will be sending them to at least to Ben and Pastor and also Titus, so that he can distribute to everybody else. And also I will distribute to the people that I know over here. So we shall keep doing this every day, same time. So we have fixed the time to be 5 o'clock. If there's any change, we'll let you guys know in advance anyway. So thank you so much. I think this will end our today's class. Thank you.
God bless you. Thank you.